Welcome back. Well, for the markets, yes, it is still about holding 1600 and 16,900 for the Nifty at this point in time. There is some amount of positive indications coming in from the European markets where Credit Suisse shares have traded higher in pre-market trade. So that would definitely provide some confidence to us in the second half of the trading session. And that's generally where the trepidation occurs once the European markets start trading and how specific stocks are, in fact, trading in the past couple of days, especially the banking stocks. Now, that Credit Suisse shares more than 20% higher in pre-market trade, so that's definitely a positive. But back home, one of the stocks that we're tracking today is Reliance. It's in focus as JP Morgan, in their latest report, maintained their overweight call on the stock. Sonia, tell us more. Why?
So the stock is not reacting to it much, but it's very interesting because Reliance has underperformed quite a bit this year. I mean, the Nifty is down 6%, but Reliance is down over 10% this year. But JP Morgan says they have an overweight and they have a price target of 29.60. Now, they're saying that for a long-term investor, this is perhaps a really good time to get into the stock and it's an attractive opportunity. That's because there are multiple catalysts that Reliance has over the next 2 years. One, of course, is the listing of its consumer businesses, which is impending. But the other catalysts are, A, the petrochemical growth, a large 5G capex monetization. Their new energy vertical is seeing a ramp up as well. And these are a couple of other growth triggers. So, on one hand, the stock has fallen. On the other hand, growth is looking good. And also the FI ownership is now at a multi-year low. It's at a 6-year low. So JP Morgan says that the stock price is now just 2% above their bear case, which means that perhaps the worst of the bad news is already in the price. And hence they have, this aggressive target of 29.60. For now, the stock is not reacting much, but this is JP Morgan's view. But as crude oil has extended its losses, Avendus Spark has written a note on how OMCs, oil marketing companies, stand to benefit. Abhishek is here with the details. Abhishek.
Well, Avendus Spark has written on OMCs, they say that there is a game to be played on benign crude. So they have upgraded all their recommendation to buy from AD. The new target price for BPCL is around 440 rupees per share, IOCL at 105 per share, and HPCL about 270 per share. They say that 2 out of 3 global agencies expect demand to outpace the supply growth. So China reopening plus ATF to drive the demand growth going ahead. Lower oil prices is favored by the fact that higher global crude inventory is there, excess China crude and product inventory, and also the fact that headroom is there in Russia as well as OPEC's production. So recession could actually further propel this. Crude could be in the range of $75 to $85 per barrel, and OMCs typically outperform during stable or low oil prices. So OMCs would have stable or better marketing margins, low working capital requirement, a better GRMs along with the fact that lower fuel and loss. So stocks are trading at near decadal low in terms of valuations. BPCL at about 1.3 times, IOCL at about 0.8 times, and HPCL at about 0.9 times. Back to you.
All right, Abhishek, thanks a lot for that. Another stock which is buzzing around is ICICI Prudential Life Insurance, as the management has approved the appointment of Anup Bagchi as MD CEO. We'll talk more about that in just a bit. Stay tuned.